So good morning, everyone. It's Tuesday, 2nd of December, 2025, morning in the UK. It's the last month of the year. The period of the season of festivities is approaching, during which many of you will be on holiday. I have a 20-minute slot, and I'm going to really concentrate on two themes this month. One is the prospect of peace in Ukraine, which could be imminent, we learned this morning. And the second is the ramifications of the UK budget, which was announced, as you know, last Wednesday, 27th of November. Now, this is a particular concern for those of us who live and work in the UK, but I think some of the economic themes arising apply to many of our European neighbours, not least France. I'm going to just digress slightly with a general point that Mr. Trump's tariffs, in the view of many seasoned economists, were going to have apocalyptic consequences for the world economy, with the prospect of immediate recession and so forth, and massive falls in volumes of trade. Well, my initial observation, and we're now what, 11 months into the Trump presidency, Trump 2.0, is that the Trump tariffs have not had the economic impact that was foreseen. And that, in fact, as we know, the financial markets are still riding high. Trade levels are still robust. And in fact, exporters to the US are learning to live with these tariffs, as indeed was Trump's own expectation. And albeit there's a certain amount of reshoring going on with international corporations moving production facilities from overseas back into the US. To that extent, MAGA policies are working, and the MAGA support base is robust, albeit that there is a very strong anti-Trump reaction within the US, which I'm going to touch upon briefly today. Looking at my global dashboard, this is politics, financial markets, geopolitics, the three lenses through which we observe the world as it is. I'm going to unfold some of these themes going forward. Starmer and Reeves are under pressure. I call them the odd couple. They're intimately related to one another. They cannot escape one another, and their fates are conjoined. In France, there's been some stabilization of the really very disjointed political situation, but there's a lot of concern and indeed speculation as to who the next president of the Republic might be, given that the presidential election will take place in just 18 months from now, in May 2027. There's a lot of to say about European politics, for which we don't really have time, but note that the Netherlands election of 30th of October did not really produce a conclusive outcome. It was expected that the right might take power, but that's not going to happen. There is no change of PM. In the USA, the government shutdown was finally resolved due to a deal in Congress, and there is increasing focus on the midterm elections, which will obviously take place in November of next year, 2026. And it could well be that Trump is in for a challenging electoral round. We'll touch on that. Financial markets, well, those fears that I alluded to last month about the spillover from the shadow banking market persist. You might know that specifically in relation to the activities of private equity companies, which are increasingly taking the role as provider of credits for medium and large companies. There have been a few wobbles in the Nasdaq relating to the big AI megaliths. And in fact, even the president of Google, Pichai, warned that an AI correction could be in prospect and that it would take down everybody equally. Well, it hasn't happened yet. Whether it is going to happen is something that we can discuss. I mentioned last month China's economic slowdown, with India growing at nearly twice the rate of growth as the People's Republic. Crypto is still going through a very bad patch. If you invested in crypto at the beginning of this year, or in Bitcoin at least, you would be substantially down, and counting your losses, it's lost about over two-thirds of its value this year. Much to unpack there. Gold is still riding high, but it's stalled. I mean, it's just above $4,000, but it does seem to be that central banks are still buying gold and to some extent dumping their stock of US treasuries. Oil has flattened again. You remember it spiked last month on the back of renewed sanctions by the USA on the Russian oil majors, Lukoil and Rosneft. And it's back, somehow the oil price doesn't seem to be affected by the general geopolitical uncertainty prevailing. But there are reasons to suppose that the oil price could increase. Obviously, if the Saudis and others in OPEC reduce production, and that would certainly have a knock-on effect in terms of certainly the European economies. Now, in terms of geopolitics, the big story, which I'm going to talk about, is the Ukraine peace plan, which is actually in play. And the other big event on the horizon is that it looks very like Mr. Trump has decided that the best policy with regard to his Venezuelan neighbor is regime change. And US forces have been massing in the Caribbean, both Marines and naval vessels, and they have obviously aerial assets as well. Whether there will be a full-scale invasion of Venezuela, I think is probably less than 50%. But increasingly, the squeeze, the pressure on Maduro is being tightened, and it will be interesting to see how that resolves. Now, in terms of this peace deal, which was basically put together by Trump's special envoy to Russia, who has met Putin, I believe, 6 times. His name is Steve Witkoff, and he is not a diplomat. He is a Chicago real estate mogul, very much in the mold of Trump himself. He has managed to put together some kind of plan with a man by the name of Kirill Dmitriev, who is also not a career diplomat. In fact, he was head of the Russian Sovereign Wealth Fund, so very much a wheeler dealer. This deal had 28 points, many of which were not to the taste of the Europeans. But in essence, if I could just distill this down very briskly, it would involve Ukraine ceding to Russia all of the territories that are currently occupied by Russian forces. That is to say, the Oblast of Luhansk, of Donetsk, Zaporizhia, and of course Crimea, which has been under Russian control since 2014. But it would also mean the cessation, the ceding of a large part of the Donbass. That's this area which is very rich in coal and iron resources. Arguably, it's no longer of the economic value that it once had. But that's not the point. The main point is that strategically, it means Russian forces might be closer to Kiev were that to happen. The other main stumbling block is that the Russians require that the Ukrainians reduce the size of their armed forces and have a cap on the number of military personnel to 600,000. Well, I don't think that's going to happen. The Ukrainians have currently got about 1 million men in uniform, and that makes them almost as formidable a military power as the Russians themselves. That's a huge sticking point. And the other point, the other group of points, is to whether, as to whether Putin could be received back into the global community of nations, with Russia rejoining the G8. The Europeans are not going to have that. They're just not going to sit back down and have tea with Putin when he's still been indicted by the International Criminal Court. That said, I mean, the Europeans put together a counterproposal when they met at the G20 summit in Cape Town at the end of last month. That proposal has now gone back to the Americans. The Americans have discussed it with the Ukrainians at Mar-a-Lago. And today, Witkov is back in the Kremlin meeting Putin to discuss a revised version of the plan. Now, the signs are that the Americans think that something is going to come out of this, something very concrete. Putin himself has not signaled that he would agree to a ceasefire because he believes that the Russians are winning militarily. And indeed, the Russians seem to have taken the symbolically important town of Pokrovsk. Zelensky's own internal position has been weakened by corruption scandals and the loss of his number two, a man by the name of Andrei Yermak, on basically allegations of corruption. And it does seem that he had his fingers in the till. One of the most important outcomes of this is going to be how the Europeans respond. And in the view of the French economist Louis Vincent Gave, the key question is that the Europeans will split into those groups, such as the Baltics and Poland, which do not want to make any concessions to Russia, and those groups like the Scandinavians and possibly the Germans, who want to normalize relations with Russia to some degree. Starmer and Macron appear entirely opposed to the deal, but there are limits as to how far they can oppose it if the Ukrainians themselves sue for peace. So watch this one. I think we're in for a likely an important announcement, possibly within the next week. When we last convened 4th of November, the mayoral election was underway in New York, and the socialist Mamdani won. And the purpose of this slide is just to remind everybody that the forces of the left are still on the march. And indeed, the anti-MAGA movement is gaining ground in the USA, just as left-wing parties are prospering and reforming in Europe. Just very, very much by the by, Jeremy Corbyn's Your Party launched over the weekend. And frankly, it could have been choreographed by the Monty Python's Flying Circus because, talk about left-wing factionalism. The co-founder, Zara Sultana, was actually found to be blocking the doors, trying to prevent delegates from entering because there had been a disagreement about, procedures. So, believe it or not, apparently 12% of the UK electorate would consider voting for this outfit. Well, we shall see. But socialism is not dead. And in my view, the most important factor is that young people cannot remember that the socialism the communist regimes which presided in Europe between 1945 and 1991 were catastrophic. I mean, they were absolutely awful for their peoples in terms of their freedom and their living standards and so forth. And the young people have completely forgotten that chapter of history, which is so, resonant for people of my generation. So back to the UK. The budget on 26th of November resulted in taxes going up as foreseen to a post-war high. They're going to be at something like 38. The tax take will be something like 38% of GDP by 2028-29. That will be the highest post-war high. Just to put that into perspective, the French and the Austrians tax their citizens to the extent of about 52% of GDP. So in European terms, it's by no means at the high end. But the point is that the march of taxes is going up at a time when the labour market is extremely weak, with unemployment rising, and when unemployment is already the highest in the G7. And then there are a whole slew of statistics which I could share with you, which are pretty concerning. And the ongoing process of deindustrialization, the closure of oil refineries and so forth, the reluctance of big pharma to invest, car production down. We know that was partly because of the cyber attack on JLR. Housing market static. It might begin to increase because at least Reeves refrained from increasing stamp duty. But with both of these two, who are kind of joined at the hip, they're a political team whose fates are intertwined. And you remember, I used to call Cameron Osborne the pantomime horse because their political engagement was overlapping to such a great degree. And these two, I mean, chancellors generally tend to move very closely with the Prime Minister and vice versa. They actually are neighbours in 10 and 11 Downing Street. And the political popularity of one undoubtedly affects the other. And as far as these two are concerned, their stock is falling. Well, in terms of the measures, I'm not going to go through every single major policy change, but just to say overall that this was a budget in which taxes were increased in order to fund additional benefits, and in particular the cap on child benefit to just 2 children, which was originally introduced by the Tories, is now suspended, which means that you can have as many children as you like and claim more and more benefits. Now, the arguments behind this is that there are a very large number of children in the UK who are living in poverty. Well, when you drill down to, what does that actually mean? The definition of poverty is a family or a household which lives on less than 60% of the median national income. And that you could actually eliminate child poverty, therefore, by basically getting rid of all the wealthy people and lowering medium incomes on that basis. Of course, a lot of people are not going to have their living standards increased if they have additional children that they can't afford, and if they don't work and live only on benefits. But the political ramifications are profound, because there are a lot of people who would describe themselves as working class strivers who are increasingly resentful of the fact that they see families who are living, who actually have higher incomes than they do, who are not in work. And, this is particularly strident in the case of young people who are out of work, employment and training. The number of which has increased. The number of people claiming universal credit has increased by 1 million since Labour came to power in July of last year. Very quickly, there's, penalising people who are trying to build up their pension pots with the restriction of salary sacrifice. There are mansion taxes, but to be fair, these are modest. They're nothing like what was envisaged by Ed Miliband in 2015. It's 2,500 additional council tax effectively per year for people who live in homes worth between 2 and 5 million, 7,500 on homes above 5 million. That's probably affordable for most people who have property, but not all, because remember, there are a lot of elderly folk who live in houses which have increased in value, who are asset rich and cash poor. There's additional tax on rental income. So, goodness me, if you're thinking of ever going into buy to let, forget it now, because it is so unfavorably taxed. There's going to be VAT on your Uber rides. Well, arguably that was a wrinkle in the VAT regime. Cash ISA allowances to be reduced. It's not good news for strivers and savers, and for people generally in work, and particularly because the tax thresholds have been frozen such that ordinary working people, these are the people who apparently were set to benefit from Labour's policies, are going to be taxed more as their incomes rise with inflation. So at least there were no wealth taxes announced, and at least the growth forecasts, both by the IMF and by the OBR, are better than perhaps we would have expected some months ago, leaving Reeves with increased headroom. That's to say, room for manoeuvre, or a wiggle room if there is a downturn of any kind. The fiscal deficit prospectively might even be down next year to about 3.5%. Well, these predictions, these estimates are extremely unreliable, with the debt to GDP ratio remaining reasonably stable up to 2030. Well, I would say the bond market took this package with a bit of nonchalance. There was a very minor increase in borrowing costs for the government at the 10-year bond and the 30-year end. And on the plus side, there's increasing evidence that, in fact, the British economy is not in such a bad place as perhaps we thought. One commentator has said that Britain is, well, a number of commentators have said that Britain is best placed for the impending AI revolution, which is likely to generate an improvement in productivity in the next few years. The Tories really have put Labour on the back foot. Just to say very quickly that Badenoch's response to the budget was really ferocious. A lot of people thought that she was being a bit unkind, but in fact, it was very effective. And it does seem that the Tories have got their mojo back and have got a kind of a mission in place, which the electorate, I think, will come to understand. And perhaps this may impact the rise of reform. KPMG, the money men, think that Labour's package will have damaged growth. And the OBR, that's the Office for Budget Responsibility, has come out of this process very badly. They dropped a report on productivity just before the budget, which had a damning effect. You remember Reeves gave this very odd press conference on 4th of November saying we were all living in difficult times, which signaled possibly the rise of income taxes, which wasn't politically acceptable. Then the OBR published figures on Friday, which suggested that, in fact, there was no black hole in the accounts at all. And on the budget day itself, the OBR accidentally published their analysis of the budget before the Chancellor had even stood up in the House of Commons. So unsurprisingly, the head of the OBR resigned yesterday, and there's all kinds of political repercussions in the and talk in the newspapers in the UK as a result of that. Whether the OBR will survive in its present form is something we could discuss. I would just say, sterling actually has remained stable. Bond markets, as I say, stable. Spending is going to increase, but not really until 2028. Tax rises will come into effect in 2028, but some of the infrastructure spending starts immediately, which means that the economy, this package, despite its wrong-headedness, may have some stimulating effect on the economy. Just very quickly, we have Mahmood, who's the Home Secretary, herself the daughter of Pakistani immigrants, a Muslim, taking a much more robust policy towards illegal migration, which itself is extremely controversial within the ranks of the Labour Party. Interesting, this woman seems to be an outlier in a government which seems to have lost direction. Very quickly, there was a study released by an American think tank, which is normally quite well respected, the NBER. They say Brexit has cost the UK economy 6 to 8 percentage points of GDP per annum by now. Well, okay, we can argue about the counterfactuals. What if COVID hadn't happened? What if, they'd got a better deal? What if the Ukraine war hadn't happened and gas prices had spiked? But my point is that the Lib Dems, who still command around 12-13% of the poll, argue that the main thrust should be to rejoin the customs union, and they are winning friends within the Labour Party, such that I think we will see very shortly a policy alignment to recommend rejoining the European Customs Union, if not the European Union itself. And I was speaking to one political analyst the other day who thinks that the 2028 general election will probably be dominated. Oh my goodness, it's like a recurring dream, by Brexit. My paradox, which I would just point out to you, is that since Brexit happened, the UK economy has become more like Europe rather than less, certainly in terms of the labour market, which has become much less flexible and more rigid, in terms of public spending as a proportion of GDP, and in terms of regulation. So did we get what we voted for? Well, I'll leave that with you. I'm very quickly on France. They've reintroduced military service. I think other countries will follow. I mean, there is still a huge rumpus going on about the direction of fiscal policy. Meanwhile, this man here, Jordan Bardella, is is leading in the polls for the next presidential candidate. French bonds are up, the yield is up, but not substantially. Inflation, I've already said that UK inflation is at 3.6, is the highest in the G7. Possible that BOE will cut rates in the forthcoming meeting of the 18th of December. The LSE, London Stock Exchange, is at near record highs. The pound is holding up. Gilts are, well, okay. They're about the level that they were at the time of the Liz Truss budget, but then conditions have changed since then. They're stable. Europe, not much to say except the spread between the 10-year Trésor and the 10-year Bund has alleviated slightly, has narrowed slightly, which suggests that the European bond markets are reasonably sanguine. Italy is down to, as I've mentioned before, their borrowing costs are lower than the French now. And very final slide, because I'm overrunning. The Fed has kept interest rates on hold. Inflation is steady at 3%, higher than Europe. Growth ticking around 2%. So sorry to overrun, Amanda. I'm going to leave it there. But may I just say that for those of you who celebrate Christmas, as I do, I hope you have a joyous one. And for those of you who don't, happy holidays.